Correct.
time frame, that time frame.
Exactly. So if your setup is ready, which presumes that you know how to put up a setup, which is not what you can say for a lot of people. So especially when you don't know how to create a setup, then you go through the rigmarole. Add this, add that, add this, add that. So like you yourself said, it takes about 5 minutes for me to analyze a chart. That is using one time frame. And then if you switch time frames, this goes adding. Let's be charitable and say it adds 1 more minute. Right? So then you are actually looking at about 7-8 minutes. The market is not staying still for 7-8 minutes, is it? It's doing its stuff. And 7-8 minutes is a very, very long period of time in today's markets. I have been doing charts for 40 years. So it will seem somewhat blasphemous if you hear from my mouth that charts are going to be passé. The day of charting is slowly receding, as it were. Because today's market, you do not have the luxury of spending 7-8 minutes analyzing a single stock. And this, mind you, is a single stock, right? One stock. Today, 2,000 stocks are traded, and about 200 of them are traded very well indeed, leaving aside Nifty and Bank Nifty, which are traded humongously. I'm not even going into options. So what do we do? What is getting lost? What is getting lost is efficiency. What did COVID do to the market? It has brought a whole lot of new set of people. An extraordinary addition to the trading set. A small percentage of them are the investing set. So now you have a situation where you are taking far too long to analyze, and there is this whole lot of people who want to trade the market swiftly. And most of these new people have come with little or no capital. And the offset or the offshoot of that is most of them are day traders. Now you combine this with the force of technology that has invaded the market. 94 में trading ring बंद हुआ. I was part of it back then. It shut down and progressively online trading picked up. But the great burst we have seen over the last few years has changed the landscape considerably. Old-timers still find it difficult to deal with the new market. Most of the market is now on mobiles or handheld instruments. And that is speeding up everything so much more. What does technology really do to anything? Technology speeds up whatever is the action which is going on. What does that do to the market in terms of the market cycles? The markets in the 70s, the 80s, up to the 90s were extremely leisurely. It was a completely different kind of market. where trend following worked, where taking a position and waiting worked. In the 90s, we became institutionalized. And then 90s through 2000, we saw a very kind of choppy kind of market, not in terms of movement, but in terms of participants. Because the institutions came in, the FIs came in from 93, then we had the scandal of 92, and the market went into a sustained sideways 95 through 98, 99. And in 2000, we had that tech boom which sent the market haywire. Then 2003, the market changed again. And the FIs came in. And they changed the market's character. And then the blue chips went through the roof. You had sustained cycles in pharma, in FMCG, in MNC counters, which lasted 10 years, 15 years. The pharma cycle ran from 2008 till about 2016. And in 8 years, stocks went up multiple times. So the whole mindset changed. People before 92 never even knew that the market could go so high. Back in 1986, I think, when the market made a top, Sensex was 664. Sensex. And we all thought this was too much. Today, 664 points happen in a single day or intraday. And then 4,500 happened during Harsha time, and then we all said this is too much. And then 6,500 happened during the tech boom, and we said this is too much. And then the FIs came and took over and drove the market upward. And then it went into 5 digits. And then everybody said this is too much. So the market has kept changing. However, the biggest change in character in the market has happened over the last 5 years. That is with the advent of technology into the market. The use of algos has come in over the last 2 years maybe. But the progress to online trading, the progress to net-based trading, all of these have changed the character again. And what is the chief change in the character? The cycles of the market have become shorter. That's what technology does to any industry that it impacts. It shortens the cycle. And when cycles get smaller, a great deal of change happens in the background. And that changes the paradigms that you held to be true of a buy and hold strategy for a long period of time, of doing things in a certain way. All those started to undergo a change. And this change has got accelerated in recent times, to the extent that people today are mystified that everybody can make money out of options, that 1 rupee change and 2 rupees change. And so everybody has gravitated to the options market. And all those who were not able to handle all these quick changes which were happening, they moved over to trading in index. So index futures, Nifty, Bank Nifty, index options, these became the primary vehicles. That is what is the market made up of right now. But lots of people are still interested in stocks. And there are 2,000 stocks, and at least about 300 or 500 of them which trade quite actively. Every traded stock presents us with a profiting opportunity, which can be harnessed if you can spot the change. Because in change lies potential for profit. So the whole game today has become about spotting the change. And when cycles have become smaller, it gets manifested as increased volatility. If you are not prepared with an approach to the market which can help you deal with the volatility, you will be knocked out of the game. Directional trading, which is the hallmark or the, case of so many people, people are finding it so difficult to engage in directional trading today. It's because of the heightened volatility. What is required here now for us all to participate more effectively in the market is for all of us here, and which is also one of the main reasons why many of you are here, is to adopt technology. And that is why you're seeing so many algo-based providers. But how many people know about algos already? The older generation do not know technology, do not know algo. The generation which stepped in recently have no problems. They don't have to make any adjustment because they got directly into the technology-based and algo-based arena. They don't have the problems or the baggage of the past. These people are the ones who have adopted to the options arena very quickly. And that is why you're seeing this explosion of volumes here. Alongside, the market itself has enabled the whole options arena, and you're seeing what you're seeing there. But directional trading is not really being catered to very much by the algos. Strategy algos are limited. There are lots of execution algos. Now, strategy algos require that you are able to create strategy. Running it is just a computer thing, right? You fix up an API and you go from your end to the broker's end and then have it executed. But how many of us here really know how to build strategies? All of you know some strategy and all of you are doing it through charts. But if your strategy is taking 5-7 minutes to implement, the market is too fast for you now. And it's just going to get faster. And your problems are going to become more acute. Which is why I made the statement that charts are going to become passé. Because looking at a chart, drawing a conclusion, then vetting it through multiple time frame or through other tool sets, all of this takes so much of time that the gap, the delta between your conclusion and your execution becomes too large. So where is the solution? The solution is to again go back to technology only. Take advantage of those kind of softwares which solve your two immediate problems. Number one, create strategies. Number two, save time. One thing all of you don't have is time. Nobody has it. We all can get strategies off the shelf, borrowed, read in a book, wherever. You can get strategies. But where do you get the time? The technology that you adopt should give you strategies and save you time. Save you time where? Save the time in analysis. Which means, what does the software have to really do? That software has to process all the data that you look at in the chart. If, for example, you will put on a chart, you will look at the candlestick chart and look for patterns, and then you will slap on a trend line or a channel or two, and then you will add a couple of indicators, and then maybe add a Bollinger Band to check for volatility or have some ATR readings. Or you may go a little esoteric and do some Elliott wave, or draw Gann angles, or use the square of 9, or go on to Ichimoku and do the stuff which is related to that. There are so many things to do. The more things that you do, the longer it's going to take. But if you have a technology-based solution which will do all of this for you and give you process data on a ready-to-use platform, then your problem is solved to a great extent of not spending time on doing the analysis and reserving your time for doing a proper execution. And execution is the key, the strategy is not the key. Execution is the key. That is what results in profits and losses. So if you cannot fine-tune your execution, you're going to get lost again. Your strategy may be brilliant. So you need to have the delta made very small between the time of your decision and the execution. So you need a software which merges these two. These are the problems that I have encountered along my way. I'm an active trader, I'm an active day trader. I'm also a multi-day trader, I'm also a positional trader, I'm also an investor, as are so many of you. No one wears an exclusive hat. At least if you're playing directionally, you wear many hats. But even though you can define that so-and-so is a positional trade of mine, can you stop the clock? Can you stop the market so that it works only as per your requirement? You can't. The market is going on all the time. And the more active you are, the more the problem related to managing that trade. So managing the trade requires that the trade be tracked all the time. So that's another thing that your software needs to do. It needs to track this trade which is open all the time. It needs to update the targets, it needs to update the stops wherever it is necessary. So this was the problem to which I thought I need to find a solution. And I have done my bit in creating a software of this kind. It's called Neot Trader, and it's my baby. And it's been in the market we've had soft launches. So this is the first time we are making it public. So Neot Trader will do this job for you. Is Neot Trader a scanner? Yes, it is. Is Neot Trader more than a scanner? Absolutely. If you think of a super scanner, which also gives you the stops, which also updates the stops, which gives you the targets, which gives you an idea about the market at one go, you will take approximately 10 seconds to know what to do. 10 seconds, that is all you will need after the market starts. And that is the need of the day. I can't spend 5 minutes developing a view. I mean, assuming you're being a very hands-on guy. Why shouldn't you be? I lay a wager that most of us are not hands-on because we don't know how to be hands-on. If there was money in being hands-on, then you would be. Why not? If you can extract 1% a day, theoretically that is 37x of your money in a single year, if you do the math. And if you ask anybody on a standalone basis, can you extract 1% a day? 90% of the people says, I think I should be able to. But the fact of the matter is you can't even extract 1% in a month. And if you read that Zerodha report which came out, lots of you might have seen it. It says people don't even make 7% a year. The problem does not lie with any trading platform. Any which way you see it, the problem comes and rests with us. And the solution has to be found at our level. And for that we need an assist. We need a companion. You, you marry because you want to progress your family. But at later stage of life, your wife is your companion. And you cannot imagine a life without your companion. You've all been trading for various periods of time. Somebody is 1 year, somebody is 10 years. Someone is even more. Who's your companion? Is there anybody? Trading is a very lonely furrow. There is nobody who can help you in this. Fortunately, today we have technology to act as companions. And we should take advantage of that. So the companion that I have created does the analysis for you, puts out the trades for you, gives you ready-made data on which you can build your own trades, and the whole thing will take less than a minute. And once you have a trade ready, either given to you by the software or created by you yourself, you will spend all your time in the most vital thing, which is execution, tracking the trade, and taking it to completion. That's the key. If you can't manage that, it won't work. I'm not saying this is the last word on this sort of software. Many more will come. There are some which will do some, equal stuff here also. That's fine. But how many traders are there? And how many solutions are needed? The number is very skewed. So it is time, as a serious trader, of somebody who wants to make a career through trading, to adopt something like NeoTrader or any other equivalent product if you find one in the marketplace. You can't do without one. You will be left behind in the game. That's the truth. It may not happen to you now, but it is going to happen. You can take that for sure. When arbitrage started, NSE BSE arbitrage, then stock future arbitrage, do you know what the returns were? And I'm not talking too far away, I'm speaking like 20 years ago. The returns were an obscene 10% a month, or even more. 10% a month. Today, arbitrage is still going on. Do you know what? So what is the return? Today the return is 6 to 7% a year. That's the kind of change which has happened. There used to be arbitrage desks which had 200 people, 400 people sitting around. Whole brokerages were run only on the business of arbitrage. Today, where are they? All those 200 people have been replaced by machines which do arbitrage. So today there are 2 people to manage those machines. And the other 200 people are sitting at home or gone elsewhere. Technology is taking over our lives in one area after the other. It's already hit the ground running as far as stock markets are concerned, as far as trading markets are concerned, as far as analysis is concerned. If you do not pay attention to the progress that technology is having. Today, 60% of the volume has already shifted to electronic trading, algo-based trading, and most of these people are doing options. So lots of you have Twitter accounts, right? How many Twitter billionaires do you know of? So lots of them, right? I earned 1 crore in this week's expiry. Maybe they did. I have no argument with those. But the point is, how do you earn that kind of money? Assuming that it is true also, how do you earn that kind of money? You don't earn 1 crore a week by doing it manually. They all earn it by doing it through the use of technology. They all earn it by putting up the capital which is required. They all earn it by bringing the necessary discipline that is required for putting on the trades, taking them off, managing them, shifting them, doing all the things that they do. And then they succeed. But what are directional traders doing today? They are coming to the market with 50,000 rupees in the pocket and they are shorting options, bank nifty options. They win 3 days. 920 straddle. Yeah? Lots of people still doing it. Maybe it still makes money. It does. But again, arbitrage story. It returned 8% and today it is returning 1%. How much time do you think it will be before it goes to 0.5%, 0.25%? The irony is that when it goes to 0.25% and 0.5%, the amount of money which will be deployed in it will be 10 times what is being deployed today. Why? Because the big money bags will come, they will put it through the technology, which they can afford, co-location and all that. And then they will extract this 0.25% and 0.5%. It is enough for them when you run 100 crores. But a guy with 50,000 in the pocket, his lifespan in the market is approximately 1 week or 2 weeks. Let's be charitable and say it is 1 month. And this is the sad story of options that no one speaks about. Everybody wants to speak about X, Y, and Z who made 10 lakhs and 1 crore. So the chimera of big returns may be true, but it is attracting the wrong kind of crowd. The directional trading still works, and it works very well because it's not going to go away. It's been so many decades, but trend following still works. Markets have speeded up, so many things have happened, but trend following still works. But because market cycles have shortened, mean reversion techniques have to be adopted. And if you have to do mean reversion techniques, that means your activity has to be so much faster, so much more. And if that has to happen, it also means that the decision points have to be so much quicker, so much more. And as a human being, the most difficult thing for you to do is take decisions. Because as a human being, you're beset with conflicting emotions all the time. And that is where the role of technology really comes in. So whether you want it or not, whether you like it or not, this is an eventuality you're faced with. So earlier you adapt to this, the better it is that it's going to be. This Finbridge Expo is a classic testament to how much progress technology has made. You see, every second stall, every third stall has got something to do with a technology-based approach to the market. And that's just going to get more acute. So, I just wanted to raise this as a point, that the way we have been doing things, if you want to be an active player in the market, and it is time really to be an active player. Why? Because with speeding up of the market, with compressed volatility, volatility is there, but it is compressed over a smaller zone. It's controllable and it is actionable if you have the right kind of tools to address that compressed volatility. It's not as though suddenly the VIX is now 40% or the intraday volatility of stocks is about 5%. Intraday volatility of stocks is still 2%, and that of the indices are still about 1.25%, 1.5%. That's not changed. It's the number of times that it fluctuates within that range that is changed. And each of those fluctuations presents you with an opportunity if you are able to harness it. And the only way that you can harness it is by adopting technology. There's no other way. I am the old school. I'm 65 years old. I've spent 45 years of my life in this market. But I designed that software and I'm working on it every single day. If you don't adapt to what's going on in the market, you will become a relic.
Is also what I understand.
Right. So, multiple questions. Does it have pre-designed stuff in it which gives it? Answer is yes. Can I put my own stuff into it? Answer is no. But there is a but to that, saying that I have covered almost all the tools of technical analysis, the most used indicators, the tools, and I've created it in such a manner that you can take portions of it. Let's say, for example, you actually like the pivot points, taking a random example. So you take your basic set for the day, for the week, for the month. I forgot to mention that you can run NeoTrader through multiple time frames. It's not just meant for trading. You can do multi-day trading, you can do multi-week trading, you can do multi-month investing. All of these are possible. So all these toolkits is designed in a manner to cater to anybody. It's not just the day trader. I use the examples of a day trader just to illustrate some points. But these pre-designed ones, you will have your favorites, everybody does. We all have our favorite indicators, we all have our favorite tools. You take that tool and take what NeoTrader throws up, save it to a watch list, and then take that and run it through everything else to know where your watch list is getting met by more and more set of criteria. So you may start with, let's say, 8 names or 10 names, and then you can distill it down to 2 names or 3 names, wherein you would want to do it. And I guarantee you, in and through that entire experience, you will never have to look at the chart. You will be looking at ADX, you will be doing Ichimoku, you will be doing Heikinashi, you will be doing candlestick patterns, you will do all of this stuff, Bollinger Band and volume expansion and range expansion and you name it. You will do all of those, but you will not see a single chart. This is my... See, I am not getting into this seamless trade because the regulations on that are too complicated. I have given you a one step. So you press that one step button, you connect with your broker and place your order. So there is a one step button. So if you like this, you just say trade it. And then it will go to your broker. Your broker means that broker has to be signed up with NeoTrader. So right now we have a panel of about 4, but that number will probably go up progressively. So either you join with them or you get your broker on our platform. We are happy to sign on anybody. But then you press that one touch. And then this facility, we have also given it on Telegram. So you are in the office, you are not able to look at the screen, nothing, but you want the trade. The trade will flash on your Telegram, and there is a Telegram trading bot. So you just press buy or sell, and then you are done. So we have given a facility to action the advice or your conclusion. You can directly take the advice as proffered by the software, which is ready-made trades, or you can generate your own by looking at the process data and say, okay, based on this. Now, people use CPR here. Anybody using CPR? Yeah, I'm sure people are using, that's a fairly popular thing these days. Now, I've taken CPR and programmed it such that you can straight away take a trade just on the names which show up, because it meets criteria 1, 2, 3, 4 under which CPR operates. So you see the name, where is the need for you to check where is the CPR, is it up, is it down, yesterday's high, this is R1, S1. You don't have to do anything. That name comes up there, Tata Steel, press the button, trade Tata Steel. Time, that's the key. And process data, that's the second thing. If I save you these two, then I think I've done what I set out to do. So that's my whole pitch for today. Thank you so much for patient listening.